Puppy Trades wanted to do a quick technical analysis update on the S&P 500. Okay, so the last time we talked about the S&P 500, I actually got my wave count critiqued by people who I would normally consider trolls, but they were correct in this instance. So in my prior video, I had this is wave 1, this is wave 2, and this is wave 3. Okay, the people who corrected me were completely correct because in Elliott wave theory, wave 3 can't be the shortest wave. So the way I had it counted was I had 1 and 2 up here, and wave 3 was the shortest. That is a violation of the rules of Elliott wave theory because wave 3 is usually the biggest wave, but it definitely can't be the shortest wave, okay? So we have wave 1, wave 2, wave 3, wave 4, and wave 5, okay? So clearly this is the end of an impulsive wave because we have this big sell-off, right? We all remember this big sell-off in September. It looks like that corrected the entire cycle from the March low. Now, the position that I'm taking is a little aggressive because I'm not just using Elliott wave theory. I'm also using the classical TA bull flag. So anyway, the trolls were correct. My wave count from the March low was slightly off. This was not wave 1. Looks like this is wave 1, this is wave 2, this is wave 3, wave 4, wave 5. Now, we know this is an impulse. How do we know this is an impulse? Because we already closed above the high. Okay, so there's no reason at all right now to be looking for the crash, right? Because we are in an impulse structure. Right? How do we know we're in an impulse structure? Because we've already closed above the high. All right, the NASDAQ is way above the high of February. Okay, so this is an impulse structure. This is not an expanded flat. This isn't, you don't look for Armageddon here. You look for opportunities. Okay, so last time we talked, yes, wave 1 was not here, wave 1 was here. But the idea that this was an impulse and we were looking for an ABC correction from the September high, that was completely correct, right? So the last time we talked, we were right here. I was calling this a massive bull flag, and boom, right? In a few seconds, we gapped to an all-time high, okay? How do we know this is an ABC correction that's complete? Well, we've already gapped above this high, right? So we know this correction is complete because we've already gapped above this high. Google has already closed above this high, right? That's a member of FANG. Okay, so what we're seeing right now, the small caps, the banks, oil, these sectors are outperforming. If you saw this week, stocks like Fiverr, stocks like Zoom, stocks like Datadog, they had big sell-offs, right? So there is still sector rotation going into the small caps and going into the financials and going into oil. Okay, that's why the S&P 500 right now is outperforming the NASDAQ. Okay, but anyway, let's just talk about the S&P 500. Wave 1 impulse, ABC correction, okay? How do we know this is an ABC correction? Google, well, how did we know this was an ABC correction? We knew this was a completed ABC correction because within a few weeks, Square Cash, PayPal, Copper Miners, Nike, Target, Bitcoin, Qualcomm, Google had all closed above this high, right? So we were not, this was a completed correction, right? Even when this failed, I wouldn't say it failed, but it didn't break above this high in this one swift move like PayPal and Square Cash did. We knew that the components of the S&P 500, many components, had already closed above this high, right? Alibaba had closed above this high. Okay, so we weren't looking for Armageddon. When we were right here, I was saying buy the dip, all right? And buying the dip was the right move. If you're a bear right now, or if you were a bear down here, or worse, if you were an option seller down here, right? You were taking advantage of this, low implied volatility, selling options. Well, that didn't work out, right? We had this correction from this high, and then we really impulsively, there are 3 gaps in this one move, right? This is a 3-gap play. This is clearly the start of a new impulse wave, okay? So we have wave 1, wave 2, and it looks like we just started wave 3. Right? Wave 3 confirmed, I would say. So now what do we do from here, right? Well, while you were trolling me in October because Tesla and Apple didn't hit my time targets, you should have been buying the dip, right? That was the overall message, buy the dip, okay? And we did buy the dip down here, and now if you're a bear, you're underwater, right? Your broker's already called you. You're done. If you're an option seller, you flee to Mexico by now, right? Like legitimately, if you were selling options on SPY, I mean, your wife's filed for divorce. You're done, okay? So there's not really anything new to do here, right? You were either a bull down here buying the dip or you weren't. I wouldn't chase this right here, okay? What we can possibly see, though, is we could see more consolidation in this bull flag. And what I would love to see is a reaction off this lower bound of this pitchfork for a potential buying opportunity. But I'm not saying that will happen. It could happen, right? So if you were a new long, you'd be looking for this lower bound of the pitchfork to be a buying opportunity. And then we're going back to the median of this pitchfork. I wouldn't be surprised if we had consolidation in SPY, because SPY has a lot of components that QQQ does not, right? Apple and Tesla, are still down here. Okay, that's unusual, right? Normally, Apple and Tesla lead, like in August, and then financials, Boeing, those names, the travel, leisure, even stuff like Dave & Buster's plays catch up, right? Right now, the laggards are leading, and this is really good. Stocks that were down in this area all summer, now they're in this area. And that's good, right? Because if QQQ is way up here and the banks are way down here, that's a little scary, right? So it's good to see Apple and Tesla and Microsoft and all these, AMD, all these stocks consolidating. Okay, now moving forward, the best thing to do is be long the market with a trailing stop. I entered the market down here, right? I got in Camping World down here. I got in Apple down here. I got in BJ Parts, carparts.com down here. And we're seeing, some of these sectors are taking off before others, right? So if you're a tech bull, I would say keep being patient. If you're a bank bull or an oil bull, or you've been playing the laggards, I think some money's going to start rotating out of your sector. We're going to start seeing QQQ and, the big tech components play catch up, okay? So bottom line for S&P 500, next buying opportunity is the lower bound of this pitchfork. But overall, you could throw all the wave theory away. This is a bull flag, and we're looking for the median of this pitchfork to be reached. We're also looking for the equal legs of this bull flag to be reached, all right? The equal legs target is 382. Okay, so what I'm expecting is that SPY is going to continue to grind higher for about, 2.5, 3 months. So 3 months from now, 2.5 months from now, I'm expecting SPY to reach 382. The next buying op, in my opinion, well, the big buying op was down here, okay? This is when all the bulls were getting trolled because the market wasn't moving. All right, then the market starts moving. All the people who are selling options shut down the brokerages on Monday, right? Because they don't have the liquidity. Okay, TD Ameritrade shuts down because everyone who is selling options, trolling the bulls, gets gapped up on. All right? Don't do that. Okay, so the next buying op is, in my opinion, the bottom of this pitchfork. It may not happen. It may not happen, all right? That's why we get down here. We get in down here. The next buying op, if it happens, is right here. I'm holding my long positions. There are new positions that I'm considering in other sectors that were leading before, like, the solar energy sector. We're starting to see that sector pull back while other sectors are catching up. We're starting to see the cloud computing sector pull back while other sectors are catching up. So there are going to be opportunities in other sectors. We're going to have plenty of videos on those. But for the S&P 500, I want to see these gains digest. I want to see us move sideways and off the lower bound of this pitchfork. That's the next buying off for SPY. You get in for the ride to 400, the ride to 420. If you're already long the market, I would say the next big, really, really take serious caution price level is 380, 382, right? If SPY is above 380, 382, personally, I'll be waiting for a pullback. If it doesn't happen, congratulations, okay? But the cool thing about my trading style, it doesn't just rely on wave theory. It doesn't just rely on bull flags. It also relies on Andrews pitchforks, okay? So we have a beautiful Andrews pitchfork right here with clear, beautiful reactions on the median. The median's already acted as a magnet before, okay? These lower bounds have acted as magnets. Notice as soon as we got away from this lower bound, boom, right? Right? Puppy trades is wrong, boom, okay? As soon as we got away from this pitchfork, we go back. As soon as we get away from this median, we go towards it, right? This is a valid pitchfork. So more so than 380, I'm looking for this meeting of this pitchfork to be hit. And that could be good news for longs, right? Because what I'm also projecting is that maybe SPY consolidates sideways while big tech and software and growth catches up. Okay, so if SPY consolidates sideways, the median of this pitchfork will be higher. Okay, so more important than 380, I'm targeting the top of this median of this pitchfork. The next buying op is going to be somewhere around here. As far as time targets go, I think in the next 2.5, 3 months that SPY will reach 380 at least.